Hey everybody, it's Mike Broadhurst with the Broadhurst Group and the Carolina Realty Group. Today's Monday, November 15th, and we're ready for Bluffton, South Carolina market report. Let's go ahead and take a look at this week's report. If you recall, over the last 3 weeks, we've been addressing 3 questions. A few weeks ago, we asked the question, is the market slowing down? And then last week we answered the question, are markets, are values starting to stabilize? And then this week we're going to address the question, what impact could rising interest rates have on our market? So let's go ahead and answer that question. As you know, for the past few months I've been predicting a rise in interest rates, and of course that's no great revelation. A lot of financial experts have expected this, especially in light of the recent inflationary rates here in the United States. However, let's go ahead and take a look at these interest rates. This is taking a look at rates over the past 3 years. And as you can see, back in 2019, we were just below 5%. In November of 2018, interest rates had fallen to 3.72%. And then last November, almost a year ago, interest rates had fallen to 2.69%. Last July, we were at a low of 2.84%, and then this October, where we are now, the average interest rate for a 30-year mortgage across the country is 3.09%. So what does all that mean? Well, let me give you a short view of the impact of how rising interest rates can impact our market. Over here, what you see is a household income of $100,000 and what they can qualify for under most Fannie Mae and Freddie Mac programs, which allows them to have a mortgage payment that's equal to about 31% of their gross monthly income. What that equates to is a principal and interest payment of about $2,100. Now, what I'm doing here is I'm accounting for taxes and insurance. How do rising interest rates impact that person and their ability to purchase? Well, behind me, you can see last month, or maybe back in July, that person could qualify for a $514,000 mortgage payment. Interest rates now have gone up 1/4%. Keep that in mind, 1/4% in the past 4 months. If they continue to go up, let's say they go up a full percentage point, that same household will only be able to qualify for a $453,000 mortgage. That's about a 13% decline in their ability to qualify or their purchasing power. So yes, interest rates do have an impact on our market. Now, this is the other thing that I wanted to take a look at. This is back in July when we were at 2.84%. You can see that we had 238 closed sales in the Bluffton market. At the same time, during that same month, we had 184 properties go under contract. Now, this is really interesting. This past October, just this past month, we had 216 closed sales. What's that telling us? Yes, the market has slowed down. We've had fewer purchases. But at the same time, during October, we actually had more property go under contract in October than we did in July when interest rates were even lower. The point of all this is A, inventory levels remain at historic lows in our market. B, closed sales continue to outpace new supply. Number 3, we continue to see double-digit appreciation in our market, and there just doesn't seem to be any slowing down. And number 4, interest rates have yet to impact our market. Will that change? There's a lot of moving parts in our real estate market. We'll keep an eye on it for you. If you're looking to buy or sell and you want to be informed about whether it's the right time to sell or whether it's the right time to buy, give us a call. I'm Mike Broadhurst, 843-837-7773, and we'll see you next week. Thanks, everybody.